these financial risks from climate change are distinctive, and they require a different approach if we are to manage them effectively. First, these risks are far-reaching in their breadth and in their scope. They will affect all customers, all geographies, all industries. Their impact will be correlated, the effects will be non-linear. Together, that means that these challenges, these risks, are likely to occur on a much greater scale than other types of risks. Secondly, these risks are eminently foreseeable. I can't tell you now exactly what will happen and when, a bit like I couldn't tell you what happened with the B word, but what I can say, as this chart of possible carbon pathways highlights, with a high degree of certainty that we will face some risk. Either we carry on our current trajectory of carbon emissions and we will see the physical effects of climate change, or we start to change that trajectory of carbon emissions, and in which case we see the transition risks. In all states of the world, we need to address risk, we just don't know which one. And then third, and for us at the Bank of England, this is the most important, the size of those future risks depends on the actions that we take today. If we are to minimize our future financial risks, we need an early and an orderly transition. And again, as this chart highlights, if we want that early, orderly and transition, we need to bend the carbon curve now. If we wait for the risks to materialize, it will be too late for us to act. Now, let me be clear, it's the real economy that needs to act, that needs to change. But the financial system, as Susan and others have already outlined, has got a core role to play in accelerating that change. As I said, the financial risk from climate change will be minimized in an early and orderly transition. And through the decisions on where and how to allocate capital, the financial system can pull forward such a transition so that financial institutions are ahead of and in control of the transition, directing capital to those firms that are resilient to the transition and avoiding investing in those that are not.